Beautiful. And welcome everyone to another Port Jackson Securities webinar. My name's Lachlan Callaghan. I'm from Fortem Wealth and I'm joined by Neil Young from Elixir Energy. Welcome, Neil.
Hello, everybody. Glad to be here.
Thank you. Thank you for joining us. So, Neil, I understand that we had an announcement today, but we'll get into that sort of thing later on. But just for people that haven't joined one of our webinars before, we go through the sort of construct of the company and how it operates. And then we go into recent announcements and have a final Q&A for the opportunity for you watching at home to ask the CEO a few questions. So for those prospective shareholders that don't know much about the company, Neil, can you tell us what Elixir Energy does and the sort of board members that are on board with you from being in Australia going into Mongolia?
Sure. So we are a single asset focused company. We own 100% of a very large license located in the south of Mongolia, just north of China. That license is for the exploration and production of natural gas in the form of coal bed methane, or CBM, which is known in Australia as coal seam gas. History here really starts more than 10 years ago. I used to work for Santos in business development, did a lot of work assembling a coal seam gas acreage position for that company, which now supplies gas to Asia, including China. About 10 years ago, Mongolia emerged as a country that was exporting coal to China by truck. And that told me two things. One, it's very close to China. Two, it's got coal. And if there's coal, there's potentially coal seam gas. So more than a decade ago, I went there to seek exploration rights, which took many years to procure because the law needed to be changed. And we were indeed offered the first production sharing contract for CBM under that change of law. That was signed in 2018 with a private company that I had set up a decade ago. That company was backdoor listed into Elixir. And since then, we have invested money in exploring for and appraising gas in Mongolia. After the backdoor listing, assembled a team here in Australia with the right credentials to do so. So that was led by a chairman appointment of Richard Cottee, who's very well known in the Australian energy space. He ran a company, QGC, which went from $20 million to $5.5 billion when it was acquired by British Gas, which was subsequently acquired by Shell, and which coincidentally produces coal seam gas from Queensland and sells it to China. Our next appointment was an ex-colleague of mine from Santos, Stephen Kellerman. He set up Santos's coal seam gas business. And he's generally acknowledged as one of the foremost technical experts in the space globally. The most recent director appointment, a lady, Anna Sloboda. She's a joint Australian-Belarusian citizen, speaks Russian, has worked in China, and is accordingly familiar with an ex-Soviet country, which Mongolia is, albeit one at the other end of the ex-USSR empire.
Okay. And so how the efforts been going in Mongolia? What's the sort of gas market space that they have at the moment? And how have you been able to either introduce or make the market for them?
So that because there's no existing natural gas in Mongolia, we initially were focused on the great prize that is the export market to China. And Mongolia's key attribute here is immediate proximity. So we're only about 400 kilometers from the main gas network in China that connects all the way through to the Caspian Sea and to Turkmenistan, and accordingly goes a long, long way. We're about 1/10 of the distance of that. Other markets, however, in Mongolia itself include power generation, and we're looking at a small-scale power generation project to start with. Larger customers for electricity generated by gas include Australian company Rio Tinto that we'd all be familiar with, who have very large copper gold asset there. Other markets include using gas for vehicle fuels. I've mentioned there's a large trucking fleet that takes coal through to China. And so we can see that there are multiple scalable markets. The big prize is China, but there are many intermediate prizes of their own. In terms of the work that we've done, we commenced drilling in the latter part of 2019. That program went through to the early part of 2020 when we had a significant discovery well, the first such well in the country's history. We were then whacked by COVID, as everybody was globally, but we managed to continue to work all the way through that. Through 2020, drilled a number of successful follow-up appraisal wells, and then through into 2021, we have continued to drill. Some wells have been successful, others have been dry, as one we announced this morning. But that's the nature of drilling, that one has a spectrum of outcomes. We are in the middle of drilling many dozens of wells, and which we're fully funded for, and we look forward to continuing to prosecute that and indeed accelerate that. As we announced today, we've brought a second drilling rig into the field, and we'll be looking at even expanding beyond that as well.
Okay. Well, maybe we could elaborate a little bit more into sort of the drills that you have been doing at the moment. What's the sort of results that you've been going for those particular drills? And if that isn't public knowledge at the moment, what's the sort of what's the balance sheet look like at the moment for the future?
So balance sheet's very strong just now, certainly stronger than it's ever been in the company's history. We've got around $34 million in the bank. And to put that into context, the sort of exploration strat hole well that we just drilled cost less than $100,000. We drill slightly more expensive appraisal wells where we measure gas content and permeability and other parameters, and they cost 2 or 3 times more than that. So we can see that coal seam gas or coal bed methane exploration is extraordinarily cheap compared to any other form of petroleum exploration. And that is true double-fold in Mongolia, where drilling costs are substantially lower than they are in high-cost locations like Australia. So that's a great attribute for us, and accordingly demonstrates that the sort of balance sheet strength that we've got allows us to maintain 100% ownership position for as long as we want. We don't need to bring in any partners that we don't want to bring in. We've got enormous flexibility accordingly because of that, and then we can prosecute an expanded and accelerated program of many dozens of wells, as I mentioned, over the forthcoming years, with the ultimate goal of building up a resource base brick by brick that, if we're successful in doing so, we think will be of the size to be of significant interest to major energy companies, be they from China globally or even from Russia itself.
Yep. Okay. At the moment, how we're seeing the market play out, we understand that China is going to be the most marketable market to go into. I had a question come through via email, and it was going to be, what was the sort of way that we're going to be transporting that? Do we have any idea of the sort of volumes that we could be transporting?
Our targets are to discover and appraise trillions of cubic feet of gas. Now that's a lot. That means that you would move that by pipeline. The size of that pipeline is unknowable at this point, but key thing is when you're going a relatively short distance, like 400 or 500 kilometers, like I mentioned, you could build a relatively small pipeline. It would cost less than $1 million a kilometer to build. That could be expanded through compression and looping over time, and ultimately take hundreds of terajoules a day of gas. So pretty significant volumes. As I mentioned, prior to building a pipeline, there are major markets in the form of electricity, both locally into the Mongolian grid, to Rio Tinto, ultimately even to China. There's electricity transmission that connects our acreage to China as we currently stand. But the ultimate goal is our pipeline deliveries, and we see that not only the distance is short, but a key thing for pipelines is terrain. You want to avoid rivers and mountains, and we're in the middle of a rolling desert. So there's a border to cross. That's a political issue. But large companies of the type that I mentioned earlier, it's their bread and butter to deal with those sorts of political issues.
Okay. And how did COVID disrupt your production last year? Was there a major effect on it, or was it just what was the idea?
has significant effect in terms of the ability of myself and some of my fellow Australian technical experts to travel to the country. But the counterpoint to that, and a significant one, is that, as I mentioned earlier, we've been working in the country for over a decade, which means that we've got really good local staff, relationships with regulators and service companies which are enduring. And so we found that we could work pretty seamlessly without having to, for myself or my technical colleagues, to have to go over to the country. Indeed, we found that we could bring in experts for particular aspects of drilling campaigns, such as those who help on the permeability measurement. At the end of 2019, we sent them to the country to help. Start of 2020, they couldn't do that, so they effectively worked with the local contractor online using Zoom and working with English-speaking counterparts and conducting very successful permeability testing exercises. So the foundation that we've built on relationships there has been enormously valuable and really allowed us to work. I mean, COVID was kept out of Mongolia until the latter part of last year. They've had some outbreaks since then, but remarkably, they are now basically number 12 in the world in terms of vaccine penetration rate, and are significantly better than the laggard that is Australia. And with a small country of only 3 million people and quite sort of deft application of vaccine diplomacy, they're managing to get ahead of the curve and really get a high vaccination rate going. So I would hope if that continues, it would be feasible to travel to the country again, in the latter part of this year, presuming, of course, the Australian government lets us out, which I think for business purposes they do with certain restrictions. But Australia, I think, is unfortunately lagging on the vaccination front compared to Mongolia at this point.
Okay. And in the announcement, you mentioned there was some hydrogen opportunities. Can you just explain that a little bit more for us?
So yeah, I mean, every man and his dog's talking about hydrogen these days, and I've had my eye on it for a while, because it plays to the key reason that we're in Mongolia, and that is location in terms of proximity to markets. Now, natural gas, to move it from Australia to China is expensive. You've got to liquefy it, put in a boat, take it to there, regas it. I mean, that's half your delivered cost of getting the natural gas there. Now, if you wanted to do that for hydrogen, the costs of moving are immeasurably higher. It's much more difficult and expensive to move hydrogen. So if one wanted to target future hydrogen markets in the world's largest energy importer, then you should be as close to it as possible. And you can't get any closer than Mongolia. So then you look at the fact that Mongolia's got very strong renewable energy resources in terms of wind, particularly, and also solar. Where we operate, those resources are strong. And recently we've put in place a program of importing Australian SODAR equipment, which measures resources to a bankable level. Our existing staff and relationships with government at multiple levels allow us to do that fairly seamlessly. We want to establish those bankable renewable resources, and then we can look at monetizing those through selling electricity, or in the medium term, using those resources to create green hydrogen in a location which, in my view, is fabulous in terms of potentially supplying the likes of steel mills, which in the future will look to replace coking coal with alternative fuels which don't have a carbon impact. Hydrogen seems the most likely at this point. And if that happens, and many bodies like the IEA believe it will have to happen, then we'll be very, very well placed. As an Australian citizen, I fully support us looking at hydrogen here, but as exporting it as a product is going to be significantly challenged, and it'll need to be exported as different products. So I think it's a very, very exciting area that we can build on using our existing assets, relationships, people at modest cost, and really get ahead of the curve in terms of looking at those long-term export markets, of which China, of course, is the prize for any commodity and an energy resource in particular.
Definitely. Well, I did get sent through a few questions via email. Thank you, everyone that did send them through. I'll try and get through as many as possible, but then we will go to the live audience as well. This one was from Jonathan. It was asking, with respect to the recent capital raise, there was talks of a door or / window opening up that you were keen to step through. Can you please elaborate on that?
I'm trying to remember the exact context for the door that was open. Clearly, capital markets were open, but I think the question is directed at the application of funds window. So I suppose there's multiple levels there. There's firstly in terms of capturing gas markets. I mean, there are views that demand for fossil fuels will decrease as the world seeks to meet decarbonisation objectives. That's certainly true with coal, potentially with oil, and gas. I'm sure everyone generally views as a longer-term future, but not a forever future. So we see that there are windows to accelerate our exploration and appraisal program to be placed in a position when in a number of years' time we can see that the sort of development projects involving significant generation and potential pipeline exports can be secured. So I think that's an important door that we have stepped through. We are fully funded to prosecute that aggressive program to meet that resource booking or ascertainment point within a few years' time, and then meet the multi-decade demand for gas that China will have on its journey to decarbonisation in the latter part of this century.
Okay, so on that, what's the global gas market like at the moment, and where do you see it going for the future?
I mean, there's a range of views on that. I think that the key point to note from us is that gas demand in Australia is probably going to be flat to declining, but gas demand in China is likely to significantly increase for a number of decades. I mean, to put it into context, the Chinese economy is about roughly the same size as the American one, but its gas demand is about only 20% of the demand for gas in the States. So you can see that there's massive growth there, even if the economy wasn't to grow, which no one believes that'll be the case. I mean, China's got a heavy dependency on coal, which has got polluting aspects not only in terms of greenhouse, but locally in terms of poor atmospheric conditions, etc. So there's a significant policy imperative in China to increase the uptake of gas very materially, and we're very well placed to serve that. I mean, elsewhere in the world, there'll be significant opportunities for gas in some places more than others, but we think we're in the sweetest spot that there could really be.
Beautiful. Okay, we've got another question come through via email. Is from Roy. It was more about his question goes, with rising political tensions in the Asia region, what is stopping a major economy in that region from crossing the border and taking the site by force? Should Elixir become successful in finding large gas reserves? The question realistically is asking, what's the protection of the actual asset that we have that you've obtained over in Mongolia?
I think the question is really going to the heart of, does Mongolia's independence of the country come under threat from its southern neighbour? And I think the ultimate argument that says it won't is that Mongolia's got a northern neighbour who is very strongly incentivized to keep it independent and serve as a buffer state between it and China. That northern neighbour, i.e. Russia, is a significant military and geopolitical power. So I see it as being extremely remote that China would try and disturb that status quo. Mongolia's independence is also strongly supported by what the country calls its third neighbours, led by the US, but also including significant regional powers like Japan and South Korea, even Australia, who invest a lot of effort in supporting the country. It's a democracy, which is unusual in the region, and as I say, I think its independence is pretty secure given that balance of geopolitical power.
Okay. Well, we might go to a few questions from the live audience at the moment. As I'm reading through a few of these, there's a lot of questions about the Cracker drill, Cracker 15, as we speak. and definitely with the announcement this morning. One's from Syed. Syed asked, Cracker 1S well results was just announced and reported stopped drilling at a target depth of 563 meters. And stopped in the Tesseract rather than the Permian. If the drill had drilled deeper to 1,000 meters, would you have had a chance to hit the Permian sequence? Will you consider perhaps drilling deeper to be sure the next well is in this area?
So in that Cracker region, in that particular well, we hit basement. So any Permian evidence was fairly fleeting. Obviously, before we drilled it, we believed there was a chance of Permian being present through the seismic imagery that we've got. But of course, any drill known as the vertical lie detector determines whether analysis based on such tools as seismic is true or not. In this instance, we didn't encounter Permian, but that we couldn't have gone any deeper. We reached basement. Obviously, we were disappointed in this well, but important to note that we're drilling in a permit which I've characterized before as being the size of Belgium. There are many locations to drill in. Some will come up good and some will come up bad. And any particular one that's good or bad doesn't mean a lot in terms of the total prospectivity.
Okay. Just reading through a few of these questions, there's a lot of questions on share price at the moment. Can we just get your spiel and your opinion on where the share price is at the moment, where it's been in the past and where you see it going for the future? Because I think that's a lot of what I'm looking at the moment. That's a lot of queries are coming from as well.
I mean, naturally, investors are focused on share price and clearly it's of keen interest to the company's board as well. But ultimately, our job is to deliver on the company's strategy and trust that the share price will follow success. Now, on that journey, there'll be volatility, and we can't control that. I mean, clearly, what we can control is prosecuting a vigorous program as we're doing. And if I look back at the share price history over the last year, I mean, we raised money in May 2020 at 2 cents, and I think our share price today is in the high 20s, so clearly it's appreciated a lot. We raised money through the exercise of listed options at the end of last year at 6.79 cents, so clearly there's been a lot of appreciation since then. As we've gone into the course of this year, market's been enthusiastic on what we have delivered, and indeed, one can say, however, that as we've hit May, the old stock market cliche of sell in May and go away has tended to apply to numerous stocks, not just us. And then it appears today, although only looked briefly earlier, that our operations update, which included the poor Cracker results, led to a bit of a sell-off. But hey, we're drilling 2 new wells now, and they will be followed by numerous other wells, and some will be good and some will be bad. And I expect the market will respond accordingly to the outcomes of the total program, and indeed the additions that I alluded to earlier, such as the emerging renewables type leg to our business too. So share price is what it is. We're here to deliver on the strategy of drilling multiple wells, of which we're fully funded for quite a number of years, and go from there.
Okay. We have another question here from Toby. He asked, it might be hard to put a number on it, but what's the percentage of drill results that hit CSG do you consider successful? The current strike rate would be fantastic. And obviously, we can't talk about the exact numbers if they're not public, but what's the current strike rate that you have at the moment, or success rate?
I suppose it's hard to answer because we've probably drilled about 13 or so wells in the course of the last year and a half, and the strike rate there has been pretty good. About 10 or so have encountered measurable quantities of coal, and in the wells that we fully tested, we've had some excellent results in terms of gas content and permeability, which are the key parameters we're looking for. But some of those wells were appraisal wells, rather than exploration wells, and one would really have different strike rates for exploration versus appraisal. It's hard to give globally meaningful comparisons because what we're drilling here is in a greatly unexplored and vast area, whereas if you're drilling in, say, or Australia or America, you'd be starting off with far more information, but in a far smaller spot. I think an exploration strike rate of 50% in coal seam gas would be very good. In appraisal, you'd be looking for, say, 75%. But those are fairly rough numbers, and empirically, it's hard to really sort of center into some more tighter parameters than that, given the vastly different circumstances that prevail in different locations.
Okay, and I think that leads into Andrew's question. Andrew's asked, the next drilling, Mania 1S, is close in geography to Cracker, which just failed. If there was another failure, even more pressure will come under the share price. I think the question is going to, why is the geography between those so close together?
Well, I think there must be some confusion there because Manly is more than 100 kilometers away from Cracker. It's in a completely different sub-basin, and frankly, there's no technical correlation between one and the other. If that one comes good, then obviously great. If it comes bad, well, as I say, we've got dozens more wells coming up, and the fact that two dry holes might follow doesn't really mean a lot scientifically.
Yeah. Okay, beautiful. And ladies and gentlemen, thank you for all your questions that are coming through. There's quite a few questions regarding the share price for the future, which we did touch on. There is one interesting question from Ali, and Ali's asked, is there any French directors, which is a little bit different to what we're getting at the moment, but is there any French directors at the company?
So there are no French directors at the company. There's not a lot of, I suppose, correlation between capital markets in Australia and France compared to some other locations, and in all my many dealings in Mongolia, France doesn't have a lot of presence. I mean, Germany has significantly greater historical connections for various reasons, but most of the relationships in the country are with the third neighbor countries that I described earlier, the Asian ones. The UK because of Rio, America because of it's America and because of geopolitics, but yeah, otherwise Japan, South Korea, Australia, India increasingly.
Beautiful, beautiful. Well, is there any final comments that you want to mention, Neil, before we end?
I mean, people invest in companies to make money, and obviously a lot of your questions have been about share price outcomes. I mean, what we are intent on delivering is building up a significant resource of gas. In the success case, that would lead to a company that would be valued at many multiples of what the current share price is indicating. There's risks, as there are in any resource company, in terms of geology and what it delivers, but we believe the potential outcomes are rewards which significantly reward the risk takers at current and higher share prices. So we think we've got a great story. One or two dry holes don't really mean anything in terms of the long-term value picture, and we'd encourage a slightly longer-term perspective for potential investors than what we might be happening on the market today. And for the real long-term investors, I'd say there's a fabulous story here in terms of the renewable and green hydrogen potential, which we're only starting to look at, and that absolutely complements our existing business capabilities, skills, and assets. And we think that's another fabulous journey, which comes from nothing, but could also be of value of the orders of magnitude that the base natural gas business could be as well.
Beautiful. Well, thank you for that, Neil. Thank you for joining us. I would like to thank Jackson Securities for hosting this webinar. My name is Lachlan Callaghan from Fortem Wealth. Just so you know, this webinar is not financial advice, but apart from that, thank you everyone for joining us today. Thank you, Neil, once again, and we'll see you next time.
Thanks for hosting this. Thanks for all those who've come and listened to the spiel.
Beautiful. Thank you.
Thanks.